Hey YouTube, this is Zach with Achilles Financial, and today I'm going to be talking about STEM, in particular the Blue Orca Capital short report that they published last week, as well as the STEM response to the report. So thank you for your patience for getting this video out. I was out of the office last week, as well as I have been reading the 31-page report that they provided. Now, that is a report that is copyright to Blue Orca Capital, so if you want to see that full report, that is available on their website here. I will also put a link to that in the description down below. I have personally marked up my copy, and I think that it has a lot of information that is interesting. As a STEM bull, it has provided a number of things to reflect upon and to reevaluate, and I'm looking forward to some answers from the company when they announce earnings expected February 23rd. So what I'm going to be walking through is the examples that they have or their statements within their selection right here on Twitter. So that's about 15 different tweets within their thread. A little bit more. So we've got about 18 different tweets in their thread. We're going to walk through that. I'm going to call out some of that information. Again, the full report is available on Twitter and on their website. So what I want to highlight is this is a channel that has repeatedly talked about STEM, and in a bullish fashion. In particular, we've been covering them since they were Star Peak Energy, so we have that bias. Blue Orca obviously has their bias. We're going to go through this with a subjective approach, and I do want to talk about, is there a point that we need to be talking about and evaluating as we go through this information? So the first thing that I want to do is highlight, as they go through this report, I don't necessarily see a lot in here that I personally would describe as fraudulent. Blue Orca may have a little bit different opinion on that. At the end of the day, it seems like their opinion is that the stock is highly overvalued due to the underlying business, not necessarily that they are overvalued due to fraud. Although I'm open to Blue Orca, if you are watching this video, please provide your commentary down below and let me know what you're thinking there. So that being said, as we're talking about the company overall, we want to talk about some of the key points that they bring out. The first one is going to be they had a deal with Available Power, they being STEM. It was lauded as being a more than $500 million project over the next couple of years. And I think that this was a huge deal. I've talked about it in numerous videos. And in the Investor Day presentation on February 5th, they do highlight that client is no longer going to be in the pipeline. They have effectively fired them due to the fact that they were not meeting certain performance obligations, and I don't believe that it was going to be profitable for STEM. Now, what they are highlighting here is that STEM is actually, or they're claiming that STEM is funding that capability or that information. Something that I would highlight is when we're talking about this idea of development company, which they being Blue Orca, has highlighted that STEM created a separate LLC. That LLC is titled DevCo, Development Company. And what STEM is doing is they're giving them money to give to the customer to help them build out a project so that they can more quickly purchase STEM's revenue. Now, this is something that they are actually not financing that, and that is something that they highlight in their answer to their short report. So they don't claim any revenue associated with that. Rather, they're giving them money so that they can get the project online at a quicker pace. While definitely something that is interesting, and I was not aware of it, I would highlight that this can be akin to a retail mall or a retail strip mall having restaurant space, and the owner of the retail mall will tell the restaurant that they will give them a certain allowance so that they have the capability to build out the space specific to their liking. Now, while not exactly an apples to oranges comparison, I don't think there's anything wrong with this, because the expectation here is that you'll get more money back as long as they can help to get the project up and running. Now, that being said, I am unfamiliar with the profitability associated with this potential move. So that's something interesting. I don't think there's anything wrong with it. And again, STEM claims that they are not financing the deal, so I don't think that that's an issue. Now, they're saying that only they, being Blue Orca, said that the only way STEM was able to get this deal was not due to their software, but because they were willing to invest into available power. That being said, I don't think that that's going to be the case. And if it is, I think that you're going to continue to see that having the development company offer that original build is something that's going to be very attractive. So while that model is not new, I don't think that we're going to see anything associated with it, because this is a company, or rather available power is not going to be included in any of the upcoming financials. I do hope that STEM talks about it on that earnings call, but because STEM is providing that available power capital, and they do this with other companies as well, they're able to use those funds not to immediately turn around and purchase from STEM, but rather to finalize the build out. Once that build is done, then they have the capability to start purchasing that software or the hardware associated with it. At that point in time, they do book it as revenue. However, I think that this chart right here is disingenuous as what's actually happening here, or rather the deal size of the cash flow. This number, not necessarily specific to available power, but all in, was 12 to 20 million. I'll have to look at the chart here momentarily. And when they get that money back, you're talking about it being 10x that, and it's generally over 10 to 20 years. So this would be the idea of an investment in a smaller company with the hopes of getting a larger company revenue back, especially one that's going to be recurring revenue. Now, the follow-up to this is, hey, we're talking about the hardware versus software side. Blue Orca is insinuating that the company overall is strictly a hardware company with a software component, not a software company. And definitely the splits within the money would definitely tie in to that. And I agree that we are going to continue to see that software component build, but overall, a large percentage of the revenue will continue to come from the hardware side. Now, when we're talking about these services and we tie in this 20.5 million, which in the report, I think they do a good job of walking through, is only about 16% of their total revenue for the trailing 12 months, beginning in Q3 of last year. So that is a small portion, and some of that revenue is coming from their legacy business, where they are called host customer arrangements, where essentially they, and I don't want to use Blue Orca's terms because them already came back and said this is not true, but you have these hardware leases, and then the customer is being paid, or they are paying that out, and allegedly STEM is losing money here. Now, this is something they did under the old business model. They are not going to continue doing this going forward, but this host customer arrangement essentially means STEM was able to go in, install their hardware, and then get some of that software, or rather not install the hardware, but just install the software and get that money back. And they were doing this being paid from a third-party financer. So this would be the same as if you were to go and buy a house, and the way that the house was being paid for was by a mortgage. So that mortgage company continues to pay that off. So that's what you're going to see here. So this is something that STEM refuted. However, it is still something that I think is important to note, is I would like to see what percentage of ongoing software is actually coming from the new builds that they're using for their hardware, and what the expected growth is associated with that. Blue Orca makes an interesting point where they do say, hey, all you have to do is showcase what the breakout is over the past 8 quarters of legacy host customer arrangements to new software. I think that it's super important to be able to see that information. And if STEM is able to produce that, as I do think they are going to be asked on their Q3 or Q4 earnings call, I'd like to see that information. And I do think that it could negatively impact the stock if it is lower than we would currently expect. So you can see some of those breakouts here, where you can see what it may have used to have been. I would highlight that this graph, or some of this information here, is outdated at this point in time. And to that point, whenever we're talking about what STEM is pulling in by way of the money that they have and their financial statements, I would highlight that their auditor is Deloitte, which is one of the big 4 audit firms in the United States. They're one of the best firms to go with. I really think any of the big 4 you're going to be very comfortable with. That being said, that doesn't mean we shouldn't question how this information is being presented, we should just recognize that there is a large company that is involved in the process, or rather a large audit firm that is providing their opinion there. So when you're looking at some of the different own or what they do or do not own, again, Blue Orca is insinuating that STEM doesn't own any of them. And I think that that's actually a true statement, but that doesn't mean that they are it's lease revenue, because they're being paid by that third party. So again, I'll highlight that in the STEM response that we can see here. So we've got that information there. Again, the other item that I would also highlight here is that Blue Orca insinuates, and they actually do a very good job of walking through this in their short report, that they massively overpaid, they being STEM, overpaid for the Also Energy acquisition. This is something that we talked about last year, highlighting Also Energy does provide a parallel market for them to expand into, but they really paid a lot of money for it compared to other companies in the space. And I agree with that statement. One of the things that I would call out associated with that is the private equity group that owned a stake in Also Energy valued them at $134 million in March 2021, and STEM purchased it around $700 million, which is an incredibly high multiple for only 10 months earlier. That being said, it'll be interesting to see what happens here going forward if they're able to turn some of that into future revenue. I do think that they way overpaid for this. The question is, can they convert those customers into a long-term recurring revenue stream that they're able to utilize on an ongoing basis? When we're looking at a go-forward basis, I would highlight that they also highlight in the short report some of the operating cash flow concerns, chiefly a large increase in payables and receivables. I would like this question to be addressed on the earnings call, if this is associated with some of the supply chain components of their model and some of the locking down of potential hardware in the future. I think that this would be super beneficial to clear up. If this is purely not paying their suppliers and not being paid by their customers, I think that's a larger problem and something that I want to see more about, because it is concerning at the least. The last thing that the last two things I'll call out is one in here is they talk about the sheer amount of STEM insider selling. This is something we've talked about on nearly every video. It does provide a lot of concern for me. However, I think there's a lot more money on the table for the insiders. They still have a lot at stake. There is a lot of equity there. There's a lot of equity incentives. So at the end of the day, I'm sitting here thinking, well, if I had $100 and I could see that at $1,000 2 weeks from now, would I sell any of it? Especially if I could sell 200, double my money, and still have a large percentage of what I started with, or that initial growth, and still be able to sell. I think that that's something that we're seeing here is a lot of these individuals continue to have large sums still invested in the company through stock options, and they're continuing to take profits. That being said, it's still concerning, and I want to make sure that we continue to see that there is continued investment in the company, and we did see a big buy this past summer as well. So again, they go on to talk about the deviation between some of the companies, and I do think that there is some differences in how these businesses are ran. That being said, we'll continue to watch on a go-forward basis. The last thing I want to highlight that's in the report, but not necessarily in here, is the fact they talk about some of their bogus key operating metrics, such as the pipeline and the bookings number. And the bookings number was the one that somewhat worried me, because within the fine print, it says that the customer has agreed to place a purchase order in the foreseeable future. However, executed customer contracts without binding purchase orders are cancelable without penalty by either party. So that means that the large revenue numbers, or rather the large contract or bookings numbers that you see here, so bookings and contracted backlog, the bookings number is under further review because the customer sounds like they can leave without necessarily having any penalty associated with it. And that's something that I mentioned on all of my videos, is that the bookings is a big differentiator between just pipeline. And now I'm not so certain that bookings will directly correlate to further revenue. However, the contracted backlog should be able to convert to further revenue, because those are hopefully projects that have already started but not been completed. So those are a number of things within this short report. Again, I highly recommend that you go and read it if you're a big STEM investor or interested in how some of these numbers work. But when I originally read this, I thought it was poorly done. However, having read the short report, I think they have some pretty keen insights here that should be taken seriously. Now, let's see what STEM has responded with. So what you're seeing here on the screen is the response from STEM. And I would highlight that they do call out that there are a number of inaccuracies. There are only two components that they call out. One is the software revenues, where they're talking about the host customer agreements, which again are being phased out. So I do think that this is important. This contradicts what Blue Orca was highlighting, and they used the FASB, Financial Accounting Standards Board, Accounting Standard Update, to walk through what that information looks like. And they also walk through the development capital in terms of highlighting what I said previously, which is that they use these DevCo projects to help build out. That being said, these two items are a small part of the overall short report. I would like to see a number of the things addressed in the short report addressed within the earnings call that will be in February. Now, the last two things that I'll leave you with is that this is a stock that's well loved by Steve Grasso on CNBC, and it has a lot of love from analysts. That being said, we don't necessarily want to be in an echo chamber where we continue to say that everything is good without questioning some of the points that were raised by people who have a different opinion. I think that there have been a number of really strong points, and I will once again encourage you to read the short report, come up with your own opinions. But at this point in time, I am going to pause on any further purchases of STEM shares until I see management respond to some of these different items within the short report. At this point in time, I do own a number of shares, and I currently have covered calls on those shares that are selling at the $10 strike price. Now, for those of you that are in the Discord, you see that activity and you get updates there. But for those of you who are not a part of that community, you want to make sure you are aware that while I'm still bullish, I can still be skeptical, and I would like to see management address some of the items in this report, chiefly bookings and why AR and AP, accounts receivable, accounts payable, have increased so much. So this is what I'm looking for on a go-forward basis. If you made it this far, thanks for watching. Let me know in the comment section down below your thoughts, and follow me on Twitter. Thanks. Talk to you later.